Hi, this is Steve Spangenberg, home-based business, tax, and marketing expert, coming to you live from my home in Melbourne, Australia. And today's topic is tax reduction and how to lower your taxes with the use of a home-based business. Now, you've come to this video, this presentation, with the idea of lowering your taxes. And in America, that it's not how much money you make, but how much money you keep that counts. And basically what has happened over the last 20 years is that the tax system is split into two tax systems, very clear, definite split. First tax system is for a person who does not have a home-based business. That is a person who is an employee, and they go to work, come home, they have a paycheck. They really don't even get this, to itemize deductions anymore unless they have a huge house, which they're paying tons of interest on. So basically they get taxed on the money that they earn straight away. The other system is for a person who has a home-based business. Now you get to earn money, get to live, and then pay tax on what's left over. So you get a ton, literally a ton of deductions for just having a home-based business. And that's really what it's about. And before I go on, I just want to tell you a little bit about myself. I've been a tax accountant now for over 30 years. I started my practice when I was 14 years old, and specifically in MLM, direct sales, home-based business, and that's my specialty. And I chose that because that's where the fun is in taxes. If you could put fun in taxes, that's where it is, because you get to have all those good deductions and you get nice refunds, and you just basically get to live first, pay taxes second. Now, with the deductions, being in a home-based business, there is a responsibility that goes with it. And the responsibility is you have to do three things. Number one is that you have to have business intent. Now, that means that you just can't open up an Avon, Mary Kay, or Isagenix business and say, yeah, I'm just going to buy for some friends and family. I'm just going to use the product myself and take all these deductions. No, you have to be in business. The number one thing that people have when they're in business is a business plan. Now, this is the number one thing that when I sit down with home-based business people, they do not have a written business plan. A must. Okay? Second thing is that you have to have sufficient business activity. That means you have to be out there selling, and you have to be out there sponsoring, you have to be out there doing things rather than just sitting at home saying, well, I'm going to take my little drink once a month, and that's it. So you have to have sufficient business activity. Number three, you have to keep good business records. Can't be working out of a shoebox. You got to keep track of what comes in and what goes out. Okay? Very simple to do. My philosophy is that those three things are a requirement of the IRS, and basically if you don't do those three things, you're going to be knocked down as a hobby. And what I like to do is I like to marry the business deductions with the business activity, so that you can, when you're out doing business activity, you're going to naturally generate these deductions, and we can go over a few of these deductions. This is a very brief overview. I've done all-day seminars, 2-day seminars on tax reduction through the home-based business. So a brief overview of just exactly what you can do. First thing, I'll give you an example. This is the easiest thing, is someone's automobile. Now when you drive, you're driving to work, you're driving to friend's house, you're driving to the beach, you're driving all kind of different places. The IRS is going to give you over 50 cents a mile to drive your car. Now that changes from year to year, so at this recording, 2014, it's a little bit over 50 cents a mile for just driving your car. So in your business plan, what you want to do is write it down. My intent is whenever I get in my car, wherever I go, whatever I do, it's my intention to promote my business. And that's key. Promoting your business. That doesn't mean wherever I go, whatever I do, I'm going to talk about my business, because merely talking about it doesn't qualify as a business deduction. Okay? You have to have an intent. So my intent, I'll give you an example. When I was in the States, with my tax practice, I would go everywhere. And even, I was in MLM for a long, long time. I've been involved in that industry. I was very successful in building a team. So you're not talking to an accountant who just saw theory about it. I practice what I preach, and I'm still involved in MLM today. So I would go around when I was in my car, everywhere I go, everything I did, I would hang up flyers, I would collect business cards, I would have intention if I was delivering a product to somebody. Every time I went down to see my parents, I was going to go see my parents anyway. It was a 120-mile round trip. I delivered product. My intention was to deliver that product. That's what I did. Bang, bang. We had a little chat along the way, and that's fine. Maybe we went out for dinner, but my main intent was to deliver the product. So wherever I go, I want to make my mileage deductible. So if I can get 12,000 miles of deductions, deductible miles, the IRS is going to pay me about 50 cents a mile. That's a $6,000 deduction. Right there is $1,200 for the average person in your pocket. Okay? Right now, up on this call, less than 10 minutes into this video, the average person can save $1,200 or about $100 a month on their taxes. It's worth the 10 minutes, just this call right here. Okay? So, and there's other ways that you can make deductible. You can put signage on your car and make almost every single mile deductible. Okay? So, the next thing we want to talk about is travel. And with the upshot of companies like World Ventures, all the travel companies out there, traveling is a lot of fun. I do a lot of traveling. Obviously, I live in Australia. I'm from the States. I go back and forth. I went back and forth 35 times in the last 5 years to the States. So I, have naturally write off all that travel. So let's just say that you're going to go on vacation. Now, people say, well, how do I write off my vacation, Steve? Well, very easily. You have to remember what business you're in. Okay, when you're in the MLM direct sales businesses, you are not in their product business. For example, Mary Kay, you are not in the cosmetics business. You are in the people business. Okay, MLMs, direct sales are in the people business. We build people networks, and we push products through those networks. So what do? Let's just say you're going to go on a cruise. What are on cruises that you like? People. All right. So does that mean that every time you see a person you throw up on that person and tell them about your business? Absolutely not. What that means is before you go on that vacation, in your business plan, you want to lay out your intention. My intention is when I go on this vacation, this is a business trip now followed by fun. And what I want to do is I want to gather information on that cruise to come back and market to those people afterwards. What do I mean by gather information? Give you an example. We're laying on the deck. I'm on the cruise, laying on the deck. Gentleman sits next to me, and what do you usually say? You say, hello. My name is Steve. How are you doing today? Fantastic. Hey, do you bring your family on the cruise? Yep, got my family here. Well, what do you like to do for fun? Then you have a conversation, okay? And you just, they're going to ask you what you do. Well, look, I help people create lifestyles. It looks like you have a fantastic lifestyle right now. Do you know anybody else that could be interested in creating a lifestyle for themselves? Well, the person might say no. Well, I didn't think so. The person say, well, yeah, maybe I know somebody. So you get their information, and that's called a lead. So you say, look, we're on vacation here. We're having a lot of fun. How about I give you a call after the cruise, and we can just chat about this. Fantastic. No problem. You got yourself a lead on the cruise. Now, The IRS says that you have to work 4 minutes and 1 minute out of every day to classify that as a business day. So that was your work. You see, your work is the people, talking to people. So in the average day, you're going to talk to people more than 4 hours. So basically, you know, your day is taken care of. So if you're on a 5-day cruise, if you make all 5 of them, business days, you can deduct 100% of your cruise. If you make 2 out of 5 days, you know, that's basically 40%. You can deduct 40% of your cruise. Very simple. Like I said, this is an overview. This is to just whet your appetite about what this exactly is about. And the next thing we're going to talk about are meals. A lot of people have, you know, it's a classic example of, you know, a lot of times when I go out to eat with couples, you know, my wife and I go out, couples, they say, well, why don't Steve and Leanne pay for the check because they can write it off on their tax, you know. Well, look, be cautious of that, because even if you have a, say, a $6,000 mileage deduction, that doesn't mean you're going to get $6,000 back. That means you're going to get $6,000 times your tax rate. That's how much cash. So just because you can write it off doesn't mean you have to pay for everything. Now, once again, this boils down to intent with your meals. So let's just say that I'm going out to lunch. I'm a typical direct sales person. I work a job and I go out to lunch with people that I work with. And once again, every time you go out to lunch with somebody doesn't mean you throw up on them about your business. What you want to do is do a backhanded way of getting referrals. My intent is to get referrals. So, because how many times have you gone out and somebody said, hey, you know, like when I was 95 pounds heavier, every MLM person that did diet and nutrition came up to me and said, Steve, you need my product. And I'm thinking, what, are you calling me fat? Yes. Okay. So, you know, that's just not a way to go about something. I'll say, if I go out to a meal with somebody, I said, I'm going out to lunch with Ron. Say, you know, the conversation, Ron, say, well, how's your business, Steve? Well, my business is going good, Ron. Thanks for asking. I appreciate that. And you look, Ron, I know that you have your lifestyle, you know, all fixed up. You have enough money and all that good stuff. But could you do me a favor, Ron? Well, sure, we're friends, you know. So look, here's 2 of my business cards, Ron. One is for you. And if you happen to see anybody in your travels, all right, that wants more money, wants more fun, wants a better lifestyle, could you pass that card on to them for me, Ron? I'd appreciate that. Thank you. Okay, that's it. All right. In your business plan, my intention is to ask for referrals when I'm with people. All right, I'm going out for over a meal. Okay, that means if I pay just for my meal, I still can write off my meal, which is at 50%. That's 50% deduction for that meal. Doesn't matter whether I'm in town or out of town. It's insignificant. If I pick up Ron's, I can write off Ron's and myself, that meal. Okay. Now, in my diary or in my date book, I want to document this. I want to put down in my date book, lunch with Ron, where I had lunch with. My intention was to ask for referrals and then the amount that I spent. Okay, that's good record keeping. It's also a requirement of the IRS to document that in your date book. That's part of the activity. If you ever get questioned by the IRS as far as your business activity, you show them your date book and you say, so this is all the things that I do for my business. I work my business on a consistent and persistent basis. Okay, now that takes care of all your meals. How many times you have a coffee with somebody during the week? How many times you have lunch with somebody? How many times you go out for dinner with somebody? See, all these things just add up. Now, next thing I want to talk about is paying your children. And you have to be a sole proprietor, which most of you watching this video are sole proprietor. Most people get into the advanced tax structures a little bit later in their career. The IRS said that you can pay your children to work in your business up into the amount the standard deduction. Say the standard deduction is $5,000. That's just an example. It goes up every year. So you can pay your child who's between 7 and 17 up to $5,000 every year. People ask me all the time, Steve, how do I pay for my kids' college education? How do I pay for their braces? How do I pay for, their school books? All right, all these different things. So I say basically, you do what the rich people do. Okay, there's, rich people keep their money. All right, okay, by using tax structures such as this. All right, so you basically pay them to work in your business a fair wage. Now they can file for you, they can pass out flyers, they could do things on the internet. Kids, a 10-year-old kid could probably help you out on the internet making videos or editing your videos or something like that. Okay, so you can transfer basically up to $5,000 every year, and they don't pay tax on that, federal tax on it, and they might pay a little bit of state and local, but you're over here paying 20 to 50% taxes. They're paying zero. So you're saving at least $1,000 a year per child. I had a gentleman, one time I did a phone call, and he was in North Carolina, and he said, it was for his group of distributors, and he said, Steve, I'm going to introduce you, then I'll get off the call, because I have an accountant that takes care of all these things, and I got it pretty well wrapped up. And I said, look, can you just humor me and stay on the call? And he said, all right, no problem. When he heard that, he instantly went to my website and bought my tax reduction guide and all the bonuses that go along with them. He said, because Steve, I have 4 kids and my accountant never told me about this. Can you believe that? It's incredible. Okay, once again, I'm a tax accountant that is in your business doing the same thing that you're doing. Now, the last thing that I want to talk to you about is the home office deduction. And this is where a lot of people get very like, oh my gosh, if I take the home office deduction, I'm going to get audited, or if I sell my home, I'll have to pay back, for part of my home office, etc., etc. Just not true. Okay. Number one is you're not going to get, if you take the home office deduction, you're not automatically going to get audited. If you abuse the home office deduction, you should get audited, and probably you will. All right. So let's just look at this home office deduction. There's several ways to do it. I'm going to give you the very simplest way to do it. If you have an area that you use primarily for your trade or business, okay, you can take that area, let's just say it's 100 square feet. And if your house is 1,000 square feet, I know it's a very simplistic example, all right, you can deduct 10% of whatever goes on at your house. That means 10% of your real estate taxes, of your home mortgage interest, of your mortgage insurance, your homeowner's insurance, your utilities, your electric, gas, water, sewage. You can deduct your repairs and maintenance. So if you put on a new roof, you can take 10% of that. If you use your cleaning supplies, your hammers, your nails, all the things that you use all the time, and believe me, it adds up. Okay, everything that you use to maintain your house. If you buy a new barbecue or whatever, you use that at your house. You got to have cookouts. Okay, and it even gets down to the ridiculous of toilet paper, because that's a part of operating your home. And you have people over. I mean, if you didn't have toilet paper in your house, if you have guests over or distributors over, well, you're in trouble. Okay, so the two things, there's a couple things that you have to realize. There's operating costs of your house, and then there's depreciation, and I won't get into all the depreciation. I say number one, depreciating your house is just a waste. Okay, it doesn't doesn't bring you all that much money. I'd concentrate on just the operating expenses of your house. You don't have to pay anything back if you sell your house. Those are just expenses that you used to operate your house while you were living there. Okay, so that home office deduction is just, people get scared. You know, accountants don't want to deal with it because it's just a lot of hassle. You know, look, I say to you, if I sent you a check for a couple $100 every year, would you cash it? Well, of course you would. That's what you get, you know, basically for your home office, a couple $100. You get over $1,000, $1,000 to $2,000 for writing off your car mileage. Okay, you can get a couple $100 for your meals. You get a couple $100 to $1,000 for your travel. Okay, then all the other things that come along with operating a home-based business. You have your cell phone, your internet, all your supplies. And I'm just going to tell you this one thing at the very end here. Two things. Number one, if you're in the travel business, you can write off 100% of your travel because you're basically in that industry. So if I were in the travel business, I can write off 100% of my travel. I'd be having a website with my information on it, and I'd post every single picture on every single travel place I went to. Go to Mexico, put that up there, and just basically you're out there traveling. I mean, what's the first thing you ask a travel agent if you go to book a trip? Let's say a trip to Jamaica. You say to the travel agent, "Have you ever been there?" And they say, "No, I've never been there. I don't travel." Really? Okay, you're going to a travel agent that doesn't travel, but if I'm in the travel business, I'm traveling. Okay? Second thing is auto ship. This is huge, okay? And I cover this in another white paper that I put out there. But if you're paying a monthly fee, all right, that you have to buy so much product in order to get commissions, that is 100% tax deductible. Even if you drink it all or put it all on, put lipstick on, whatever. You have to, even if you use that yourself, it is not personal use. The IRS says that a business deduction is anything that is ordinary and necessary in carrying on a trade or business. In MLM, direct sales, auto ships are ordinary. Most 99.9% of them have them, and they're necessary for you to get commissions. If you're not on auto ship, if you don't have a certain amount purchased by the end of the month, you don't get your commissions. That is huge right there. That saved a couple $100 every single year you're in business. Right there on this short video, I just showed you how to save at least $2,000 to $4,000 every single year you're in business. That doesn't count all the other nitty-gritties that I can show you on tax deductions, how to sponsor people using tax deductions, okay? Doesn't, how to write a business plan. Those are all bonuses that I put in my tax reduction package. Now, either below this video or to the right of it or somewhere, you're going to see a link that's going to take you to a place where you can avail yourself to my tax reduction package with all my bonuses.